Hey guys, AKIL'S here. Welcome back to another Weekend Trading Edge video. If you guys are brand new, I'm an investor, a trader, and a trading coach, and this is a weekly video that I do here on the YouTube channel, showing you some of the top trading opportunities that are on my radar for the week ahead, and hopefully giving you some lessons and trading tips that will help push you in the right direction. We're going to start off today with a follow-up from an opportunity that we looked at a few weeks ago that really died until this past week. We're on the pound yen 4-hour chart, and what we were looking at was this, right? One, price action that came to a previous level of structure support on the daily time frame. We started putting in signals of reversal, and we started talking about a classic reversal pattern called a head and shoulders. I won't go through the details of it because, again, we did this a few weeks ago, but essentially that pattern looks like this for you guys that are new. We come down, we go up, we go down a little bit, we go up a lot, and we go down once again, right? This bottom part being the head, left shoulder, right shoulder. And the validation point of this head and shoulders is going to be what's called the neckline. The neckline could be drawn in a few ways. One is going to be either a horizontal line representing the highest point of previous structure resistance. This is what I personally value. Or you can have a slanted trend line where you connect kind of the two areas of the neck, right? The highest point right here, the first neck, and the second point right there if that trend line slanting downwards, right? To each his own, choose which one works with your specific trading philosophy. But again, for me, it is the horizontal level of structure. Either way, once that level of structure is violated, broken and closed beyond, then we have validation of the pattern, and what we were expecting was a move up. And as you can see, we spoke about this a very, very long time ago, and it did completely nothing like most of the markets for a few weeks before finally breaking up and both violating both the slanted neckline and the horizontal one. So the question is this setup done? No, there is still room, because if you remember, we drew out a pretty big zone, and I promised that we would be back to take a closer look. So that's what we're doing. Going back up to the daily, and I'm going to delete this real quick. We did an initial kind of prediction saying if price action goes higher, then this is the area that we would expect price action to go higher to, somewhere between 192 even and about 195 highs, right? 195.80s. But this is not very helpful as far as picking targets, because this is only a mere 300 and blah, blah, blah pip zone. So we want to get more specific with where we think price can go to, and that's what we're going to do today. I think price has a great chance of coming to this 93 even handle, right? So as you can see, we're currently trading right below 92s. We're a good amount away before 93, so there's still opportunity to buy this up, whether it's on an aggressive buy where you just go straight up, or whether you go down to a lower time frame, excuse me, sorry about that, voice cracking already, and we wait for some sort of pullback like we had here, or even a complex pullback that gives us an opportunity to buy it up to that level. But the head and shoulders pattern is now in play. So this week, as the market opens, I will be looking for opportunities to get long here on the pound yen. Our next opportunity is going to come on the Euro Aussie, and this is going to be very similar to the video I shared with you midweek this past week, looking at the Euro dollar situation where we had that descending triangle that ended up breaking out to the downside. You can see here that price has come to, well, you can't see if you zoom out, price has come to a large level or zone of structure, right? Look left back in, 2020? What a year that was, where we had these massive spikes. We're come up into that zone, and we're starting to see a little bit of consolidation, right? Price action goes up, we get well overextended, and we start putting in this cycle where I'm not going to draw it all out with the ebbs and flows, but you can see that our highs are getting lower. I'll just make this a different color because I don't like that. And you can see that our lows are pretty much staying the same. And this is that descending triangle pattern. Now, just like the case of the euro dollar one in the midweek video, it's a little bit different. Typically, I like seeing these after a downward move because it's a continuation pattern. But the way we read and interpret the market is still the same, right? The highs are getting pushed lower, meaning that the bulls are struggling to push the market higher, while the lows are staying the same, which means we're consolidating around that floor. And what I would expect is a breakout to the downside. And if we were to break out to the downside, I would expect us to come to our next level of structure, which is going to be this zone right in here. Now, at first glance, you're looking at this and you're saying, well, there doesn't really seem to be a lot of room in between here and here, right? It's only a teeny tiny little gap. But because of the Euro Aussie and how volatile this pair actually is, there's probably, I would guess, 100 plus pips in this zone. If we just take a look at this right here, yeah, I was way off. There's about 200 pips in this zone, so there's plenty of room to make profit, especially if you are a lower time frame trader. So someone that's hopping down to the 4-hour chart, or even the 1-hour chart, even a day trading chart, to be honest with you, look for this potential breakout. You can see again, this consolidation is getting tighter and tighter, right? So expansion is likely to come. We technically don't know if we're going to expand to the upside or the downside. So all we can do is use our skills and use historical data to put ourselves in the best position. But as always with breakouts, there's 3 ways to look to this, right? You can try to establish a position beforehand if you're expecting that bearish breakout. That one would put you in a pretty easy position here. If we just find our risk reward tool, it's always hidden somewhere, right? Let's say you get involved somewhere in here. Price certainly shouldn't break out of these highs, right? Oops, sorry, here we go. Price shouldn't, certainly, if we're correct, shouldn't break past these highs for sure. So you can kind of already measure out your max risk reward. Price really shouldn't break past these highs. So if you're someone that wants to get an aggressive stop loss on, you can have that even lower, and that gives you a 2-to-1 risk reward, even better. So if you have that prediction that we're likely to break out to the downside and you're an aggressive trader, nothing wrong with doing that. Or you can always wait for proof, right? And what would proof be? Well, we spoke about it before. A violation of our level of structure. So price action breaking and closing below this level, that is proof that that violation to the downside has happened. If we get a violation to the downside, then we know we're likely to continue lower. And then you can approach this in 2 ways. Either look to trade the breakout straight down, or look for the pullback and then the opportunity to catch that second wave. But either way, Euro Aussie, we were tracking this in the live room all this past week. We're getting closer and closer and closer, so we'll certainly be tracking it this week to come as well. Lastly, while we're on the breakout theme, this is, you can see the notes are still on here from our Thursday live trading room. By the way, if you ever want to join us in the live trading room, do so. Head over to www.tier1trading.com. Sign up for the 14-day trial. You get to experience both the London live room and the New York live room. And I got this cool comment from a newer trader the other day who said he loves experiencing both the live rooms because although Jason Greystone and myself have similar philosophies on the market, we're both price action and structure-based traders, we approach things and we explain things in a different way. And he said it was very helpful just hearing 2 different opinions and 2 different kind of cues, so wording, to make him understand. I never really thought about that, but that is very helpful. I just thought it was cool to get 2 live rooms a day, and you know, but to have 2 different coaches explaining things in slightly different ways with the same philosophy is pretty cool. So if you ever want to join us, check it out. It's fun. You get to be around other traders for a few hours each day, talk trading. So if you're a nerd and someone looking to learn, there's no better place to be. So what we have here is a different type of pattern. This is going to be an ascending channel. And I don't want to delete all these yet, but I know it makes the chart look sloppy. But yeah, I'm going to delete them, just make it smooth for you guys. Pretty much this is an exhaustion pattern. So what we're expecting is that price is at the end of its bullish move, right? Big bullish move. Yay, everyone's excited. It moves really, really fast. And then we're still kind of going bullish, but it's kind of like you're going through the motions like, yeah, you know, whatever, we're still going to go bullish, right? Now, the key thing with this is, right, if we zoom out to, oops, there we go, get that on there. Zoom out to a higher time frame. And we look at where this ascending channel comes to. It comes right to a previous level of structure resistance. Look left, structure leaves clues, adding more proof, more clues that price is more likely to continue lower versus higher. And when we were talking in the live room, because of that level of structure, right? I'm pointing at it with my finger, but you can't see. I'll zoom my chart over. Because of this level of structure, this allows or can potentially allow a trader to be more aggressive in that before section of breakout trading, meaning that, hey, if I want to establish my position up here, which is what we talked about, you can be a little bit more aggressive doing that because you have a clear area of where that stop loss needs to go. You know that stop loss needs to go above structure, so it's really easy to place. If you can imagine this in a different scenario, right? Imagine this being our level of structure right here, and this type of pattern doing something like this. It's a little bit harder to be aggressive and, let's say, sell right here. One, because the whole premise of the ascending channel is that we should be ascending until it stops. So like we never know if this is gonna keep going higher or not. And 2, where does that stop loss go, right? You're kind of in no man's land. There's no real area to put it. So it makes it a lot easier to be aggressive with the sell here because you have this area that pretty much tells you, dear trader, insert your name, you are wrong if we violate this level. And that seems kind of weird because I know as traders we don't want to be wrong, but the reality is that traders, we're wrong a lot. The thing is, we want to be wrong as quickly as possible, and this helps us do that. So that part's done. It's, well, unless we kind of, if we were to travel up again, you can have another opportunity to get involved beforehand. But now you're waiting for one of two things, right? You're waiting for, just like we spoke about in the last example, either the break of this trend line or the break violation and the retest to look for that move down. And if we go downward, I do think we're going to travel to this area right here. So there is some room to the downside that we can push to. So another good trading opportunity to put on your radar this week. Before you go, I challenged myself to reach 5 million views and 55,000 subscribers. So to help me with that, you can do a few things. One, subscribe if you're not subscribed already. If you are subscribed, hit that like button, leave a comment below to show some love, and share this on your social media platforms and spread the word about the cool stuff we're doing here on this non-BS, non-junk, non-fluff, non-get-rich-quick YouTube channel that just gives you the boring trading information that actually works. All right, until next time, plan to trade your plan. Thank you in advance. Take care.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.